The relentless Texas sun beats down on the pristine, newly paved streets of a sprawling subdivision just 40 miles north of Dallas. The sidewalks are perfectly edged. The community clubhouse features a sparkling resort-style pool. The matching craftsman-style homes boast fresh coats of slate-gray paint and manicured, drought-resistant lawns. By all outward appearances, this is the very picture of the modern American suburb. But listen closely, and you will hear absolutely nothing. There is no sound of children playing in the cul-de-sacs. There are no lawnmowers humming in the distance. There are no cars parked in the two-car garages. The only movement is the dry, hot wind violently fluttering hundreds of neon-red eviction notices taped securely to every single front door. This is not a town abandoned due to a natural disaster, a toxic spill, or the slow, grinding decay of a collapsed industrial economy. These homes are brand new. No one has ever lived in most of them, and perhaps no one will. This is the corporate ghost town, a uniquely terrifying phenomenon born in the financial boardrooms of the 21st century, and it stands as a silent, rotting monument to the catastrophic collapse of the Texas build-to-rent empire in 2026. To understand how hundreds of newly built neighborhoods across the Lone Star State became desolate wastelands overnight, we have to rewind to the aftermath of the previous decade's housing boom. For generations, the single-family home was the bedrock of American wealth creation. It was the entry ticket to the middle class, a physical asset that a family could own, build equity, and pass down to their children. But in the early 2020s, Wall Street looked at the suburban landscape and saw inefficiency. Private equity firms, hedge funds, and colossal real estate investment trusts realized something insidious. Selling a home to a family is a one-time transaction, but owning the home and renting it to that same family is a perpetual, lifelong revenue stream. They asked a simple question: why should the working class own the land beneath their feet when we can turn them into a permanent class of serfs paying monthly tribute to our shareholders? This realization birthed the build-to-rent boom. Massive financial conglomerates stopped buying individual houses and began buying thousands of acres of raw Texas land. They partnered with the nation's largest home builders, bypassing the traditional consumer market entirely. They constructed entire neighborhoods, hundreds of homes at a time, strictly for the purpose of renting them out. They utilized their immense institutional capital to secure favorable zoning, to fast-track permits, and to outbid any regular family trying to purchase a lot. For the average Texan, the dream of homeownership was not just deferred, it was systematically dismantled by entities with bottomless pockets. Wall Street transformed the traditional suburban neighborhood into a corporate fiefdom, completely controlling the supply of housing in some of the fastest-growing counties in the country. But owning physical properties was only the first step in this grand extraction scheme. The true horror of the build-to-rent model lay in how these corporate landlords managed their new empires. They did not hire local property managers who understood the community. They employed the cold, ruthless, and unfeeling power of the algorithmic landlord. Across these sprawling mega-developments, rent prices were no longer set by a human assessing the local market or considering the needs of long-term stable tenants. Instead, the entire pricing structure was handed over to highly advanced centralized software platforms. These algorithms were designed with a single aggressive directive: push the rental price to the absolute maximum threshold of human endurance. The algorithm analyzed thousands of data points daily, communicating with competitor databases to artificially inflate the market. If a family's lease was up, the algorithm would automatically generate a renewal offer with an exorbitant increase, knowing exactly how much it would cost the family to pack up and move. It calculated the exact breaking point of the working class. The algorithm did not care if a family had lost their job. It did not care if there was a medical emergency. It recognized no loyalty, and it could not be reasoned with. It was a perfectly optimized machine for extracting And for a few years, the machine worked flawlessly. The yield generated by these build-to-rent communities was staggering. Wall Street packaged these rental income streams into complex financial derivatives, selling them to global investors who demanded ever-increasing returns. The institutional landlords became addicted to the inflated numbers, borrowing billions of dollars against the projected future value of their rental empires. But this entire house of cards was built on a deeply flawed, inherently fragile assumption. It assumed that the American renter would always be able to pay. It assumed that the well of working-class wealth was bottomless. Then came the breaking point of 2026. The economic landscape shifted violently. Persistent inflation had eroded the purchasing power of the average citizen to dust. Real wages stagnated, while the cost of groceries, utilities, and healthcare skyrocketed. And then, the corporate layoffs began to sweep through the tech, energy, and logistics sectors across Texas. The algorithmic landlords, completely blind to the macroeconomic suffering of the human beings living inside their spreadsheets, continued to demand peak pandemic-era rents. But the math had fundamentally broken. The tenants simply ran out of money. The ensuing wave of defaults was not a trickle, it was a devastating tsunami. Across the state, thousands of families missed their rent payments in the same month, and because the corporate landlord was merely a piece of software, there were no negotiations, there were no payment plans. The moment the grace period expired, the algorithm automatically triggered mass eviction filings. The local court systems in Collin, Denton, and Montgomery counties were paralyzed by the sheer volume of corporate evictions being filed simultaneously. Sheriffs were dispatched to clear out entire streets, effectively emptying the very neighborhoods Wall Street had just finished building. But in their ruthless efficiency to evict non-paying tenants, the private equity funds triggered their own destruction. These build-to-rent mega-developments were financed using highly leveraged, variable-rate debt. The business model required a constant, uninterrupted flow of peak rental income to service the massive loans taken out to build them. When the evictions emptied the homes, the cash flow evaporated instantly. Suddenly, the algorithms were forced to recognize that a neighborhood with a 60% vacancy rate is not an asset, it is a toxic liability. Faced with plummeting revenues and soaring interest payments, the Wall Street owners did what highly leveraged financial institutions always do when a bet goes bad. They calculated that walking away was cheaper than trying to salvage the operation. They engaged in massive, strategic defaults. The private equity funds simply unplugged the servers, dissolved the management shell companies, and stopped paying the debt. They abandoned the properties entirely, leaving billions of dollars of brand new real estate to rot under the Texas sun. The abandonment of these corporate neighborhoods unleashed a terrifying contagion effect that is currently destroying the surrounding communities. When a localized area is suddenly burdened with 500 empty, unsupervised homes, the descent into chaos is rapid. Within weeks of the corporate landlords walking away, the ghost towns became targets. Thieves moved in first, systematically stripping the brand new houses of copper wiring, air conditioning units, and high-end appliances. Then came the squatters, taking over the empty properties, as local law enforcement, overwhelmed and underfunded, struggled to police these massive, dark subdivisions. But for the traditional homeowners living adjacent to these abandoned build-to-rent projects, financial destruction has been absolute. They watched helplessly as the value of their own privately owned homes plummeted. Their life savings, tied up in the equity of their houses, vanished overnight as the blight of the corporate ghost town dragged down the entire regional housing market. Who wants to buy a home next to an abandoned, unpoliced mega-development? The contagion quickly infected the local municipalities. County governments across Texas had aggressively approved these corporate developments, salivating at the prospect of millions of dollars in new tax revenues. They had issued municipal bonds to build new roads, expand water treatment plants, and construct new schools to service the anticipated population boom.
But with the Wall Street funds defaulting and the properties sitting empty and vandalized, those expected tax revenues vanished into thin air. Now, in 2026, local governments are facing catastrophic budget shortfalls. They are being forced to lay off teachers, reduce police patrols, and halt essential public services simply to avoid bankruptcy. The corporate parasite extracted the wealth, destroyed the host, and then quietly fled the scene. We are left looking at a tragedy of unimaginable proportions, a landscape permanently scarred by the arrogance of extreme financialization. We allowed millions of acres of prime Texas land to be transformed into a gambling casino for private equity. We watched as the construction industry mobilized to build tens of thousands of homes, not to shelter families, not to build communities, but to serve as individual units in a massive, securitized financial instrument. And now, the state is littered with these quiet, rotting suburbs. Entire ghost towns of perfectly good houses sit empty, decaying, and stripped of their value, while simultaneously, millions of everyday citizens struggle to find affordable shelter. It is the ultimate, sickening paradox of modern corporate greed. Wall Street built the houses, Wall Street evicted the people, Wall Street abandoned the towns, and the citizens of Texas are left alone in the silence, paying the ultimate price for a dream that was stolen right from under them.